Our next guest says there's still significant upside in Apple. Let's bring in Fast Money friend Gene Munster of Loup Ventures. Welcome back, Gene. Good to see you again.
Hi, Melissa.
So based on what we know, Gene, and based on your modeling in terms of how many units will be sold for each of these SKUs, what do you think average selling prices will do compared to what they are right now?
Melissa, that's the real substance. You hit it right there with the ASPs of what happened today. It wasn't about features or the number of products. It really was revealed to us after the event ended, and we started to go through their buying pages and look at what they're charging. They introduced 9 new phones that were above the average phone price for this year. And what that means is, as we modeled this out for fiscal 19 for next year, it became progressively clear to us that these numbers are going higher and potentially much higher. And let me quickly put it in a perspective. Is our revised ASP estimate for iPhone is $791. Now, the street is at, as of this morning, was at $765. But it was difficult to get it below $800. I was reminiscing back to covering Apple 5 years ago when they would report their quarter and give low guidance, and how difficult it was at times to get the model as conservative as they were pushing us to. I had some of those flashbacks as we were working on the model this afternoon. This is a big deal, and I think that is the true mastery of today's event. 9 new different SKUs, 3 main products, 9 SKUs within that are just finding ways to increase ASP.
Within the phone alone, Gene, I'm wondering, what are you modeling right now in terms of the uptake of the 10R versus the 10S and the 10 Max? Because as a consumer, you might opt for that lower priced 10R instead, and that could depress ASPs overall.
That's what's crazy about how this higher ASP that we've talked about, and I want to go into some of that insight into how we're modeling out by SKU. The Max, which is, again, 3 products within that, are going to be about 12%. We think about 15% of those are going to come from the XS, so slightly different number. But the real product, I think, is going to be this R version, and we're expecting 34% to come from that. Now, if we put all those together, it maps out to a similar percentage of iPhones that come from the latest line every year. It's just about 50%. So it actually maps out historically. But in order to get the ASPs below $800, we had to have this massive adoption of the R. I think the R is going to be a home run. I think that's the correct way to model it. But I think that is really the depth of the opportunity here around ASPs, is even with a home run R, it still sets this up as an ASP story over the next few quarters.
Hey, Gene, so for the last couple of years, there's been a lot of talk about an upgrade super cycle. We know that these upgrades have been elongated, and today's a great example. There's not a ton of innovation. I know that some of the stuff is better, but it's not a ton of innovation. Katie Huberty over at Morgan Stanley says there's maybe 300 million iPhones that are 3 years or older. But iPhone units are not growing year over year. So is this, help us understand, at some point, are they going to start losing units?
At some point they will. It's probably 5+ years away when some form of a wearable comes out. I think that was another takeaway today, is AR is just not advancing as fast as Apple would like it. There needs to be some sort of a wearable, so that's a whole different discussion. But in the current world of a smartphone, I think that you should generally expect the iPhone to be between 0 to 5% unit growth. It's not very exciting. The broader smartphone market, as you're talking about, is declining, so fractional market share gains. But the reason why this story can keep moving higher, and I think when you're talking about the multiples early, I'm definitely in Melissa's camp, is that this has upside, even the multiples that we were discussing, 20, even higher than 20, is because if you take this approach of a stable 0 to 5% iPhone unit growth, and even we're going to have some nice ASP improvements over the next year, but stable ASPs, I think that, along with services, are going to be enough for investors. And so even the big picture here, Dan, is even in a not a great growth market, I think they can still grow the iPhone in that low single-digit number.
Gene, always great to speak with you. Thank you.
Thank you.
Gene Munster of Loup Ventures. All right.
Well, I'm long the stock, and despite the move that it's had, this is one of those times where I actually feel very comfortable staying long the stock, especially in a market that I'm less confident on, frankly. And so what these guys are talking about, really, no one's overly critical here. It's about being tactical, and I choose not to be tactical with Apple. I've been tactical over the years, and frankly, I've left a lot on the table.
So relative to the broader markets, Carter, does Apple look any better in terms of the chart?
Well, I mean, Apple is, put it this way, if you were to look at a relative performance, it basically made no relative progress in 8, 9 years, and just this last 3, 4 months has broken out above its relative peak. So to that extent, you could say this is just the beginning in terms of outperformance relative market. But day to day, where money is made and lost, it's my judgment anyway, that it's a bit ahead of itself.
None of what we said was an indictment of Apple.
No.
If we all sat here and say buy it with our hand over, then we'd have 17 minutes of sort of dead air, as they say on the TV, and that's not really good for anybody. So we're trying to point out that if you don't want to be tactical, that's fine. Jim Cramer says it all the time: own it, don't trade it. However, if you feel this is an opportunity, I do think, to Carter's point, it's gotten a little ahead of itself, and there's maybe 7% upside to 240. I think the downside is down to maybe 180, 185. That's your risk reward.
And good luck with the EKG, by the way. I mean,
you know, you make fun of me.
Whatever.
You get older in life, and you have to do these things. You'll get there someday, Weisenheimer, I hope.
And they're the same age, basically. But anyway, Dan.
So to your valuation point, and this would be the best story, and I know there's a lot of analysts who speculated this, about how do you value a recurring revenue stream? So you attach the services, you attach iCloud, you attach a monthly fee for the hardware, right? Take the ASP out of it in a way, because we know that ultimately the hardware, they're going in this R route, that's the lower end phone. At some point, you know, people are going to start thinking about these higher end phones that they do like a laptop. You don't replace them every 3 or 4 years or so. So to me, I think if you could have an Apple Prime, lump a lot of different services, music, iCloud, all that stuff
like
together
a membership.
in your phone, yeah, that's the sort of thing that people would start saying, that's how you revalue this company up, because revenue per user would be the highest on the planet for any product.
That's actually an interesting thought, Dan.
Well,
Oh, did I say that surprisingly?